Good morning. It's Friday, 23rd August 2024. It's Vijay here. Welcome to yet another episode of pre market commentary on this day, where we discuss what happened yesterday and what is likely to happen today. Today is the D day because it is Jerome Powell, who of the Fed, the head of Fed, is going to discuss about economy, interest rates, inflation, and thereof at the annual Jackson Hole conference, which normally is held in August. This time, the whole world is looking towards him much more than what happened last time, simply because there is a great anticipation that the Fed has finally woken up to the possibility of interest rate reduction rather than keeping the interest rates high, which they were talking about it a couple of months ago, higher for longer. So that higher for longer is likely to be junked, and people are looking at a loose monetary policy. Now, the markets want a loose monetary policy, and therefore they will be looking for any hints which talks of some change in stance or an increased change in stance towards the downside as far as interest rates are concerned. So it is a very important day. It will affect only for the short term. For the long term, the markets have got its own issues, which will play out in the next few months, including the US elections. So yesterday, if you go back and see what happened in our markets, we started off well, then gave up, and then moved in a narrow band, and closed almost flat for the last 2 3 hours of the trading. Yesterday was the weekly settlement. Normally, one would have expected some volatility, but that volatility was missing. So it is seen in the VIX, which shows a reduction. Now, Europe markets did well, but US markets did not do so well. They opened higher and then they sold off through the day. And there were alternate bouts of buying and selling. But at the end of the day, Dow Jones came down by about 175 points. Nasdaq was down by about 200 points, and Standard Poor was down by 50 points. Now, technical analysts will look at the candlestick pattern and say it is a engulfing bearish pattern. But these are patterns which are useful if there is any, let's say, a trend which is going on, or if it is at the end of the trend. Generally, these patterns are useful. Now, yesterday we are not yet gone to the, it is not going to overbought in that sense, though the rally was swift in the US markets. I would like to take it as a pause that refreshes. We should see the continuation of the trend next week, unless something dramatic happens as far as him saying something else or some other geopolitical event over the weekend. In Japan, the BOJ governor is again talking of inflation. So Japanese market, which was positive, has gone into negative. It's about negative 100 points as they go into their lunch. Incidentally, Japan closes for lunch, while the market has us for lunch in India. Okay. So Hang Seng is, as usual, the sick man of Asian markets. It's down by about 100 and odd points. Though it is struggling, it is trying to go into positive, but that has not happened as we speak. Oil went down below $76, the Brent crude, but it has bounced back and it is trading at 77. DXY also, which had gone down to 101, is now trading at 101.3. But DXY is weak, oil is weak, and then the Treasury, US Treasury 10-year and the 30-year also, the yields are falling, which means the bond market is stronger. So that is as far as the scenario which we are going into trade is concerned. Yesterday, for instance, while the Nifty and Bank Nifty, as I had expected, performed better than Nifty, and the Nifty was really virtually flat at 40 points plus, about 0.17. But the mid cap did well, micro cap did well, and then the small cap also did well. They all beat the Nifty in terms of performance. In terms of sectoral performance, you had the consumer durables, which did well. Then you had the PSU banks. Then you had the metals, which did well, especially Hindalco. Now, coming back to what is going to happen today will be, I suspect, it's a weekend. We're going into an event. So there could be a reduction in volumes. There could be caution both on the long and short side. There could be a lot of action in the small and mid and micro caps. So it will be a script specific day, is what I think. We are going as usual into the market with a bullish bias, which we have been since around third week of June, and we continue to maintain it. We do not see any reason for us to change it to bearish. At best, one can be cautious. So we could be cautiously bullish today. We would like to concentrate on Reliance, NBFCs, HDFC Bank, Reddy, which has fallen, looks interesting. We hold Reliance, HDFC Bank, and Reddy in our portfolios. Then some other private sector banks like IDFC Bank attracted my attention yesterday, so we have bought into IDFC Bank. Though I never ever bought into that particular stock because it promises much and performs less. But I looked at the price action; it looked very interesting. So in metals, I'm just looking at metals, but we have not really added anything fresh. We have some Tata Steel. In PSU banks, we're not adding anything fresh. We have some Canara Bank. In the private sector bank, we previously we had Bandhan Bank, which we maintain. So today I am going cautiously bullish, maybe adding a few things. Yesterday we added Dr. Reddy at the close for a swing trade. We also have it in our investment portfolio. So today we are going in cautiously bullish. Please note that whatever stocks I've talked about, you have to take care because I am not a SEBI registered advisor. These are not investment recommendations. These are only what my thoughts are, and more important, what we have actually bought. So it is, we have skin in the game in all the stocks which we have talked about. So whatever you do today, hope it is successful and you make money on it. Thank you for joining me. Have a good weekend.